All right, so today we're going to dive into a company with a pretty long history,
Oh, yeah.
Marubeni Corporation.
I've heard of them.
Yeah, 166 years they've been around, which is pretty incredible.
Wow.
And when you look at what they do, they call themselves a global cross-value platform.
Hmm.
And essentially what that means is they're taking their resources and expertise
Hmm.
and connecting with all these external partners
Oh, interesting.
to kind of generate new value.
That's really interesting, especially for a company that's been around that long, right?
Yeah, and they're huge. They operate across so many different sectors.
Yeah.
It's almost mind-boggling.
So how do we even begin to understand a company this big?
Well, thankfully, they put out this integrated report, 2024, which is going to be our roadmap for this deep dive.
Roadmap, okay.
And we're going to break down their business segments, their financial performance,
Fine.
and how they're strategizing for future growth.
That's good.
And of course, a key part of that is how they're planning to create value for their shareholders.
The investors.
Exactly. We'll mainly focus on their last fiscal year, which ended in March 2024.
Okay.
That's what they call FYE3 2024.
Right.
And we'll also look at their forecasts for the current fiscal year, which ends in March 2025.
Got it.
So FYE3 2025,
Lots of numbers.
it is. It can be overwhelming,
Right.
but our goal here is to distill the most important insights.
Yeah, make sense of it all.
So that we can both walk away with a clear picture of where Marubeni stands and where they're going.
I like it.
And one thing I wanted to point out right away
Sure.
is that they achieved an adjusted net profit of over 450 billion yen
Wow.
for the third year in a row in FYE3 2024.
That's impressive.
They actually beat their own forecast, which was between 400 and 450 billion yen.
So they exceeded their own expectations.
He did,
Yeah.
which to me indicates a really strong underlying profitability.
Yeah, definitely a sign of a healthy business.
Definitely. So how are they doing this? Let's dig into their business segments and growth strategy.
Accurate.
Marubeni has these 16 business divisions, but get this, they use something called ROIC,
What's that stand for?
return on invested capital,
Ah, okay.
to track performance even at a really granular level, even within those smaller divisions.
So they're really keeping an eye on how they're using their money.
Exactly, making sure every investment counts. And their current midterm management strategy, which they call GC 2024,
Okay.
has this two-pronged approach, right? They're strengthening their existing business domains, and they're creating entirely new business models.
Smart. It's kind of like balancing act.
It is. It's about evolving with the times, but also leveraging what you're already good at.
Exactly. Yeah.
And a big part of their focus is on what they call non-resource fields.
What does that mean? Everything that isn't natural resources.
Right, exactly. So it's like consumer products,
Mhm.
food, agriculture, transportation, even finance.
I see. So they're diversifying their revenue streams.
They are, and they're targeting steady profit growth in these areas
Makes sense. Spread the risk.
and making strategic investments in areas where they think they have a real edge over the competition. And the adjusted net profit they're getting from these non-resource sectors has become a key metric for them.
So they're really focused on growing those areas.
Yeah, and I think it makes sense, right? Because relying solely on resources can be unpredictable.
Yeah, definitely prices can fluctuate a lot.
Exactly.
Yeah.
So diversifying provides more stability to their earnings.
Smart move.
Now, to guide their operations, they also have these interesting prime and platform policies.
What are those all about?
Well, think of Prime as their proactive way of managing all their businesses. It's not just passive investment.
Yeah.
They're actively involved in driving growth and efficiency in each of their holdings.
Ah, so they're not just buying and holding. They're trying to actively improve each company.
Exactly. They're trying to make each business better.
That's pretty cool.
Yeah. And then Platform is about leveraging the scale and diversity of the entire Marubeni group.
Okay.
So they're looking for businesses with strong potential for expansion, whether that's geographically or through new products or even customer segments.
Yeah.
And they'll use mergers and acquisitions and also organic growth initiatives to achieve this.
So they're open to different ways of growing.
Yeah. And the key is combining their internal expertise with external know-how to really unlock that growth potential.
That makes sense.
It's like we have this huge network, this wealth of knowledge. How do we connect the dots and build something even bigger?
It's like a massive network effect.
Exactly. And speaking of building something bigger, one area they're really focusing on is their green business initiative.
Oh, yeah. Sustainability is a hot topic these days.
It is. And they're aiming to become a forerunner in green business, which is a bold statement.
It is bold. What exactly do they mean by green business, though?
Well, it's broader than you might think.
Yeah.
It includes businesses with direct environmental impacts like renewable energy and the circular economy.
Okay, the usual suspects.
Right. But it also includes industries that supply those crucial materials and technologies to the green sectors.
Oh, interesting. So it's more comprehensive.
It is.
Yeah.
And to break down their approach, they've got these two horizons.
Horizons, like
Yeah,
time frames.
exactly. So Horizons 1 and 2 focus on expanding their existing green businesses,
Okay.
areas where they're already strong and profitable.
So things they're already doing.
Yeah, so this includes renewable energy projects, wind, solar, hydro,
Right.
also their forestry and sustainable agriculture businesses, new energy technologies, solutions for decarbonizing industries.
A lot going on
A
there.
lot. Yeah, eco-friendly food products,
Well,
smaller scale, decentralized power generation,
wow.
battery storage, and of course the ever-important recycling and resource management.
So it's all about building on what they're already good at.
Exactly. And then Horizon 3 is about creating entirely new green businesses.
Ah, so the more experimental stuff.
Yeah, this is where they're taking a more cross-cutting approach,
Mm-hmm.
using their network and expertise across all these different sectors to find and develop those innovative, sustainable opportunities.
It sounds like they're trying to find where different industries and technologies can come together to create new solutions.
Exactly. It's about thinking outside the box. For example, could their expertise in logistics be combined with new battery technologies to make transportation more sustainable?
That's a good example, yeah.
Yeah. So it's a very comprehensive and forward-looking approach.
I like it.
Now, to see how all this plays out in practice, let's take a closer look at some specific business segments,
Okay.
starting with the consumer products group.
Interesting. What are some of the key things happening there?
So in that group, they're really focused on strengthening their lifestyle-related businesses
Okay.
and making sure their brand and retail strategies are keeping up with those changing consumer preferences.
Yeah, things change so quickly these days.
They do. And there's a big push toward eco-friendly initiatives, like the Mellow Project.
What's that?
It's focused on textiles, reducing textile waste, and they're also getting into used tire recycling.
Oh, wow, that's innovative.
Yeah, but at the same time, they're also growing their more traditional businesses like conveyor belt distribution and tire-related services.
So not forgetting the basics.
That's exactly. They're expanding in places like Thailand, Mexico, Indonesia, Cambodia.
Got it.
So it's a blend of adapting to new needs with this focus on sustainability while still nurturing their core businesses.
Smart, makes sense.
Yeah. What about the food and agri group?
Oh, yeah, huge sector.
It is.
Yeah.
And I bet sustainability is a major factor there too.
Absolutely.
So the food and agri group has two main divisions,
Okay.
and they're truly global. They've got a strong presence in the U.S. with companies like Columbia Grain International.
Heard of that one.
Yeah, and Creekstone Farms Premium Beef.
Oh, yeah, the premium stuff.
And that U.S. market actually generates about 30% of their total net profit.
Wow, so the U.S. is a good market for them.
It is. And they're looking at innovative areas like land-based salmon farming in Denmark,
Interesting.
which is a more sustainable way to produce salmon.
Yeah, makes sense.
They're also investing in environmentally friendly aquaculture feed.
Ah, so thinking about the whole supply chain.
Exactly. And working on ways to reduce those greenhouse gas emissions from livestock by managing the animal waste better.
It sounds like they're trying to make the whole food system more sustainable.
They are. They're thinking long-term about both the environmental concerns and those evolving consumer demands.
Yeah, good for them.
Now, what about the materials group? What's happening in that sector?
Well, in the materials group, they're developing their core businesses, which are copper, iron ore, and aluminum,
Okay.
but with a big emphasis on greener operations.
Oh.
So using renewable energy in their mining and smelting processes and working to minimize their environmental impact.
Good.
They're also focused on preserving biodiversity in the areas where they operate.
Good.
And they're expanding into life sciences through investments in companies like Orpha and Euroma.
Okay.
And they're continuing to be a major player in petrochemical trading.
So even in these more traditional industries, sustainability is a top priority.
It is. It seems to be a theme across all their business units.
Definitely.
Yeah.
Now let's move on to something that feels very timely given the global energy transition, the Energy and Infrastructure Solution Group.
Ah, yes. Lots to talk about there.
There is. This group is really on the front lines of navigating that transition.
How so?
Well, they're investing heavily in hydrogen and ammonia production.
Oh, yeah. Those are seen as potential future fuels.
They are, and they're aiming to set up both global supply chains and local production capabilities.
Makes sense.
They're also looking at sustainable aviation fuel, or SAF,
Yeah.
e-methane production, and CCUS technologies,
What's CCUS?
carbon capture, utilization, and storage.
Oh, right.
So it's basically ways to capture those carbon emissions and either use them or store them safely.
Got it.
They're not abandoning their expertise in oil, natural gas, LNG, and nuclear power, though.
Right. Still important today?
Exactly. But they're also pursuing decarbonization through carbon credit trading.
So trying to balance both?
Yeah. Their power division is seeing growth in retail electricity sales, decentralized power generation solutions, and all sorts of renewable energy projects.
Wow.
Onshore, offshore wind, solar, biomass, hydro, you name it.
That's a lot.
It is.
Yeah.
And they see LNG to power and gas-fired projects as those crucial bridging fuels.
Right. We can't switch to fully renewable overnight.
Exactly.
Yeah.
And they're working on these comprehensive energy solutions that integrate battery storage and digital technologies like V2X.
V2X, what's that?
It stands for Vehicle to Everything.
Okay.
And it allows vehicles to interact with the power grid.
Oh, interesting.
So it's about managing energy flows more efficiently. It's a really holistic approach that recognizes just how complex this energy transition is.
Yeah, definitely a lot to consider.
Finally, let's talk about the Transportation and Industrial Machinery Financial Business Group.
That one sounds like a real mix of different things.
It is. It's a very diverse group. Within transportation and industrial machinery, they're looking at new things in aerospace and shipping.
Like what?
Things like air mobility solutions, autonomous vehicles, using AI in ships, and even wind-powered propulsion for ships.
Wow, that's pretty futuristic.
It is. But they're also seeing growth in their more established areas like aviation, airports, and defense.
Okay.
Their financial arm includes leasing and real estate, and they have this major partnership with Mizuho Leasing.
I see.
And they're growing in things like mobility financing, aircraft, leasing, fleet management, private equity, real estate development.
Wow, they do a lot.
They do. And there's this emphasis on digital transformation in financial services.
Yeah.
And streamlining distribution.
So staying ahead of the curve.
Exactly. And within the construction, industrial machinery, and mobility segment, they're strengthening their construction equipment business through digital solutions, rental operations, and moving toward decarbonization and electrification.
Got it.
They're growing their mobility business by offering integrated fleet management services, including financing and after-sales support.
Smart.
They're also expanding in healthcare medical fields. They're exploring next-generation media, like esports and video games.
Oh, wow, keeping it interesting.
And through Marubeni Growth Capital Asia, they're investing in consumer-facing businesses in ASEAN and the U.S., including the Tim Hortons franchise.
Tim Hortons? Like the coffee chain?
Yeah.
Interesting.
As you can see, they really have a hand in all sorts of things.
They do. It's kind of hard to wrap your head around just how many different things they're involved in.
It is. It's a global operation for sure.
So how are they doing financially with all these different businesses?
Well, let's dive into the numbers.
All right.
So for the fiscal year ending March 2024, they reported a consolidated net profit of 471.4 billion yen.
Okay.
And they're forecasting an increase to 480 billion yen for the current fiscal year, which ends in March 2025.
So continued growth.
Yeah. Their adjusted net profit for FYE 3 2024 was 467 billion yen,
Right.
with a slight decrease forecast of 460 billion yen for FYE 3 2025.
Okay.
But their core operating cash flow was very strong at 548 billion yen in FYE 3 2024.
That's a lot of cash.
It is, and they're projecting a cumulative 1,700 billion yen over the 3 years of their GC 2024 strategy.
Wow.
The return on equity, or ROE, was 15.2% in FYE 3 2024.
That's impressive.
And they're aiming to keep it around 15% for the current year.
So maintaining that profitability.
Exactly. And their net debt-to-equity ratio, which tells us how much leverage they have, was a healthy 0.55 times at the end of FYE pre-2024. And they're forecasting about 0.6 to 0.7 times for FYE 3 2025.
So still in a good position.
Yeah. All these numbers point to a very solid financial foundation.
Definitely seems like they're managing things well.
Now, what's driving this strong performance?
Good question.
Well, the report emphasizes their consistent execution of the GC 2024 strategy.
Okay, so sticking to the plan.
Exactly. And that's led to a strengthening of their earnings.
Makes sense.
They're also proud of their steady profit growth. They've achieved a compound annual growth rate, or CAGR, of 14% since they launched their previous GC 2018 strategy.
Wow, that's consistent growth.
It is. So their long-term plan is working.
So can we break down where that adjusted net profit is coming from within their non-resource businesses?
We can. In FYE 3 2024, their combined Food 2, and agribusiness segments generated 73 billion yen in an adjusted net profit with a 12% CAGR from FYE 3 2019 to 2024. The power sector contributed 60 billion yen, also with a 12% CAGR.
Okay.
Their finance, leasing, and real estate business hit 39 billion yen with a 10% CAGR.
Solid.
And the construction, industrial, machinery, and mobility segment reached 27 billion yen with the highest CAGR of the bunch at 16%.
Wow, they're on a roll.
They are. So all those key non-resource sectors are showing strong growth.
That's really good to see. What about the overall trend in adjusted net profit for the entire company?
Well, from FYE 3 2019 to FYE 3 2024,
Mm-hmm.
they saw growth across the board.
Impressive.
On a consolidated basis, it rose by 211 billion yen, which is a 13% CAGR.
Great.
Non-resource fields saw an increase of 110 billion yen, or a 9% CAGR.
Okay.
And even in the resource sector, which can be volatile, they saw an increase of 83 billion yen, or a 17% CAGR.
They're seeing growth even in the more unpredictable areas.
They are, which shows the strength of their diversified business model.
Makes sense to spread the risk.
Exactly. Now, the report also talks about their investments for growth. They're projecting 1.3 trillion yen in growth investments over the 3 years of GC 2024.
Yeah.
That's a lot of money.
It is. It's up from their original plan of 1 trillion yen, mainly due to those stronger than expected earnings and the 330 billion yen gain from selling their Gavilon grain business.
Oh, right. They sold that off.
They did. They've got a big pipeline of potential investments.
Okay.
But they're also committed to being financially disciplined,
Cool.
making sure these investments create value for their shareholders.
That's what investors want to hear.
It is. So they're ambitious but responsible.
I like that balance.
Now let's talk about how Marubeni plans to create and return value to those shareholders. What's their strategy there?
All right, let's get into the shareholder value.
So they're committed to enhancing corporate value over the medium to long term.
Okay, makes sense.
And their approach is based on 3 things: strong cash flow, good ROE, and reducing their cost of equity.
So making sure they're using their money effectively and keeping investors happy.
Exactly. They know that a strong financial foundation is key for both funding growth and rewarding shareholders.
It's a balancing act.
It is. And they're being very strategic about how they allocate their capital.
How so?
Well, they're balancing growth investments with returning capital to shareholders through things like dividends and buybacks.
Okay, the classic shareholder rewards.
Right, and those divestments like Gavilon have given them more flexibility.
So they have more options now.
They do. What about their dividend and share repurchase policy? What's the approach there?
Well, they're pretty flexible with how they implement shareholder returns.
Okay.
They want to increase earnings per share, dividends per share, and manage their stock in a way that ultimately enhances corporate value.
So it's not just about short-term gains, they're thinking long-term.
Exactly. When making those decisions, they consider their growth investments, their balance sheet, their cash flow, and metrics like shareholders' equity and their net debt to equity ratio.
It's a very holistic approach.
It is. It's about finding that sweet spot between rewarding shareholders today and maintaining a strong position for tomorrow.
And they did increase their cash dividend from 78 yen per share in FYE 3 2023 to 85 yen per share in FYE 3 2024.
So shareholders are seeing that return.
They are. So looking ahead, how is Marubeni positioning itself for the future?
Well, through GC 2024, they've built a solid earnings base of 400 to 450 billion yen.
Right.
And their focus now is moving to that next level of profitability
How do they plan to do that?
through a mix of organic growth in existing businesses and strategically pursuing new opportunities, especially in those green business areas.
Right. Those are key.
Yeah, they see that as a big growth driver.
It seems like they're also laser focused on capital efficiency.
They are. They're constantly upgrading their assets and doing what they call asset recycling.
So selling off assets that aren't performing as well.
Exactly, and reinvesting those funds into higher growth areas.
Smart.
Yeah, the report suggests that this is becoming a core part of their thinking.
It's about making every yen count.
It is. They also recognize that their people are a crucial asset.
Of course.
They're working on maximizing their potential and making sure everyone is aligned with the company's strategy
How are they doing that?
through things like their new job classification system, which gets rid of that old distinction between career and administrative tracks.
Oh, interesting.
And they've expanded their mission-based compensation system to include non-management roles.
So trying to motivate everyone.
Exactly. They're also actively seeking feedback from their employees through things like an opinion box and a Marubeni chatbot.
Wow, a chatbot for employee feedback. That's
would-
interesting.
It is. It's all about improving communication and making sure everyone feels heard.
Creating a more engaged workforce.
Exactly. And then there's their broader management foundation.
Right, that's important too.
It is, especially for a company as big and global as Marubeni, they're committed to ethical and responsible operations.
Right.
They have a strong governance framework focused on operating in harmony with society, managing risks effectively, and really committing to sustainability.
It sounds like they're trying to build trust and credibility.
They are. It's about doing business the right way.
And of course, we can't forget digital transformation and innovation.
Right. Those are essential in today's world.
They're seen as key for future growth and creating value.
How so?
Well, they have a dedicated DX strategy led by their Chief Digital Innovation Officer.
Okay.
And they have something called the DI Lab, which supports new digital ventures.
So they're investing in new technologies and ideas.
They are. They understand that digitalization is key for solving challenges and creating efficiencies.
Makes sense. It's how you stay competitive.
Exactly. So this has been a pretty deep dive into a complex and fascinating company.
It has. What would you say are the key takeaways?
Well, Marubeni is clearly shifting toward non-resource and green businesses to drive sustainable growth.
That's a big one.
They have a strong financial track record, a positive outlook, and a disciplined approach to investments and shareholder returns.
Right. They're not just throwing money around.
Exactly. And they're focused on long-term value creation through innovation, a solid management foundation, and empowering their employees.
It sounds like they're well positioned for the future.
They do. Now, here's something to think about. In a world that's rapidly changing, with things like sustainability and technological advancements, the role of global trading companies is evolving too.
That's true.
How will Marubeni's approach, with its massive network and diverse expertise, help them navigate and capitalize on these changes?
That's a good question. I guess we'll have to wait and see.
We will. And for you, the listener, think about which of Marubeni's many business segments you think has the most potential for growth and impact in the years to come.
Yeah, that's a good question to ponder.
It is. It's been a pleasure diving into this with you.
Likewise, always enjoy it.
Thanks for joining us for this deep dive.